So how my mental model for these ETFs is we got crypto land and fiat world, and this is just a trade deal between the two. So hot money flows. If you think of VC as FDI and you think of this as hot money flows, it's just a trade deal. For me, it's like this is as big a deal to me as China opening up after the WTO agreement, because we've got now a free trade agreement essentially between them. Well,
I think there's going to be a Bitcoin ETF, an Ethereum ETF, a Solana ETF. Regardless of what any politician says, the banks know this is their way to stave off the effects of being forced to buy these bonds that are bad deals for them.
Nearly 3 months have passed since the U.S. Securities and Exchange Commission approved 11 spot Bitcoin exchange-traded funds, a significant milestone that many anticipated would take years to achieve. Despite ongoing outflows from GBTC, these new ETFs continue to accumulate Bitcoin for their respective funds. For instance, as of April 3rd, BlackRock's IBIT has amassed 27,3119.61 Bitcoin valued at $16.9 billion, establishing itself as the second largest holder after GBTC among the new entrants. Combined, these new spot Bitcoin ETFs, excluding GBTC, hold a total of 57,472.8 Bitcoin, valued at over $33 billion. When considering GBTC's holdings, all spot Bitcoin ETFs combined possess approximately 835,000 Bitcoin, representing around 4.24% of the total Bitcoin in circulation. Despite recent declines in inflows for the new ETFs and ongoing reductions in GBTC holdings, the approval and launch of these ETFs remain groundbreaking in the history of financial markets. Real Vision CEO Raoul views spot Bitcoin ETFs as a convergence of traditional finance and the crypto landscape, offering unprecedented opportunities for investors in both domains. Despite initial skepticism, institutional acceptance of cryptocurrencies is gradually increasing, leading to broader adoption and market integration. This shift underscores the transformative potential of Bitcoin and other digital assets in reshaping the future of finance.
Ever feel like you're wasting your money on things that don't really matter? Stop. You don't have time. Don't miss out on this 2025 bull run. Educate yourself now. Don't spend $12.50 on junk. Educate yourself on how to be successful in crypto using our Crypto Cheat Guide. Unlock the secrets of crypto and make smarter investments today. Visit the website now on the link in the description for your exclusive copy. Start your journey to crypto success today.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
So Life Raft, the regulators are kind of struggling still with letting it happen. They want to throttle it. How are you seeing the big picture play out of the regulation, the adoption, and how governments allow it to happen and that kind of phasing?
So there was a paper written by this guy at Columbia, Columbus, I can't pronounce his name. And it was about fiscal dominance. Basically, the federal government has issued so much debt, the spending is so high versus the tax receipts that any sort of notion of independent central banking goes out the window, and the central bank becomes a tool of the federal government to pay the bills, right? And if you think about what the problem is for the banking system is, okay, we know all this inflation is coming. We know that we're going to be forced to buy these bonds, and we know that's going to ding our profitability. But there's this escape raft, called crypto. And if people really latch onto this and they say, hey, why do I have these dollars, euros, yen, yuan, whatever? Let me go buy an asset that's outside of this whole system, and then I'll just sit back and watch the fireworks. That's not good for the banks. They're not going to make any money on that. So, what do they do starting in 2023? All of a sudden, the Winkle clowns, they try to get an ETF approved for 10 years. Did the Lord's work for 10 years trying to get this ETF approved in the US. Still don't have one, by the way. And Larry Fink, within 6 months, gets an ETF. And so TradFi says, okay, this crypto thing works. There's obviously this zeitgeist of too much federal spending. I mean, Jamie Dimon rages on about it every quarterly report. Oh yeah, the US is spending too money. US is spending too much money. Well, instead of them getting by them being forced to buy bonds that are negative real yielding, well, let's have a product that we can throw our clients into and make fees that's still within the system. And that's why I think these ETFs are now being embraced, which is, hey, here's this crypto derivative. You don't actually get to use Bitcoin because you can't withdraw it. You can't even redeem it. You want to redeem, you get dollars back in these ETFs, not Bitcoin. And so it's just a way to put all these people who want to get into this crypto life raft, but don't want to put in the real work and deal with private keys and, OPSEC and all the things. I mean, it's annoying, but again, freedom isn't free. And here's this ETF. You can subscribe to it through your retirement account, your pension fund. You can buy it on a stock exchange. You've got all these, respectable looking folks selling this to you now, saying this is a way to diversify against inflation. And the banking system reaps fees. And we've seen how successful it's become. So I think there's going to be a Bitcoin ETF, an Ethereum ETF, a Solana ETF. Regardless of what any politician says, the banks know that this is their way to stave off the effects of being forced to buy these bonds that are bad deals for them.
And also, the government quite likes it because the money's actually not leaving the system. It's not you and I, opening, having our ledger and taking our money outside of the system, which is, why, when I saw the European mess back in 2012, that's what got me into Bitcoin, because I just wanted to be outside the system. But these people aren't. So they're just kind of renting the performance of it without leaving the system. And that's a nice way for the government to say, well, guys, you play in this, but it's going to stop them opening the Coinbase account, at least starting the journey.
And it's better to do it this way than to ban something. Because when you ban something, then people are like, oh, well, why are you banning it? Maybe I want to have some of it. Look at the illegal narcotics trade around the world. You tell people they can't have something, they say, no, I'm going to have it. For some people, their crypto thing, they want to take their fiat, trade crypto, and earn more fiat, which again is fine. It's a choice that people get to make. But if you want to take your fiat and save it in something that's outside of the system, then you have to go and buy physical Bitcoin and deal with what the issues that come with owning physical Bitcoin.
According to sources familiar with the matter, the SEC remains firm in its intention to subject Ethereum to its oversight by categorizing it as a security. Allegedly, the agency is probing the Ethereum Foundation and issuing subpoenas to entities that have engaged with the foundation to compel them to furnish confidential documents believed to be potentially incriminating. Despite this, Larry Fink of BlackRock maintains optimism regarding the approval of Ethereum-based spot ETFs, even in the event of Ethereum being deemed a security. In response to inquiries about the possibility of listing an ETF containing Ethereum, Fink expressed confidence, stating, "I think so." Reportedly, 8 potential issuers, including BlackRock, have submitted applications to the SEC to introduce a spot Ethereum ETF to the market. A final decision from the SEC is anticipated next month, yet industry analysts are less hopeful about approval due to Chairman Gary Gensler's apparent alignment with left-leaning politics. Some experts suggest that tangible progress may be delayed until after the November elections, particularly if there is a change in administration. This scenario sets the stage for a potential showdown between Wall Street, represented by Larry Fink, and the SEC, led by Gary Gensler and potentially influenced by political figures such as Elizabeth Warren. Share your opinions in the comments section as we continue to bring you insights from discussions between industry experts like Pal and Arthur.
My mental model for these ETFs is we got crypto land and fiat world, and this is just a trade deal between the two. So hot money flows. If you think of VC as FDI and you think of this as hot money flows, it's just a trade deal. For me, it's like this is as big a deal to me as China opening up after the WTO agreement, because we've got now a free trade agreement essentially between them. Well, relatively free.
Yeah, I guess we'll see. We'll see how free it is, what the price impact is. Are people actually going to hold this stuff? If, we'll market's down, 10-15% over the last 2 days. How is that going to affect the flows? How secular is this trend of cash coming into these ETFs? How much do people actually believe in this, negative correlation thing? And can they actually deal with the volatility? I don't know. We're going to find all this out about this new segment of the market and how they behave when they start seeing the real volatility that's been suppressed in TradFi for the last 40 years. So I think the jury is still out on how big the positive impact will be. I definitely believe that the banks love fees, and this is a fee bonanza. It's an opaque, illiquid market where the end customer, they don't care if they're paying a 2% spread if the thing goes up 30% in a quarter. They could give two. But, the bank trading desk is loving it. BlackRock's just shilling them all sorts of stuff. So I think there'll be as many ETFs as they can get out in this market as quickly as possible just to ramp up AUM and get those fees.
Also, I think they're praying that they're not allowed to give ETH yield, because if they get the ETF out and they keep the yield themselves, that's a huge bonanza, because they keep the 5% yield.
It'd be great.
And, they're greedy. They will take it. As that money flows into crypto, into our world, into crypto land itself, what does it do to the risk curve? We've already started to see some sort of bananas price action as money starts getting recycled. So let's talk through how the risk curve flows.
Well, it's a wealth effect, right? So you and I hold physical Bitcoin. We're like, oh, wow, we feel real rich. We got all these new people in pushing up the price. What else do we want to own in this space? And then You move to the ETH, and then you go to Solana, and then it's, all of a sudden you're fucking trading Slurf or like Dog with Hat. It's fun. It's just humans experimenting and playing games with each other that have monetary payouts on the internet. And I think it's a lot of fun. Obviously trade with responsibility and all that kind of stuff, but it's pure emotion. It's no central authority telling you what you can and what you can't do. Whatever someone wants to list, they just do it, and it either succeeds or fails instantly. And I think that's super powerful. And for the first time in a long time, people are having fun doing this thing called trading. And some of it is tasteless memes, but whatever.
But you've been on this whole thing about the memes and the power of memes and what it actually means to crypto for quite a long time. I think you and Meltem have probably been really early in identifying that this is a real thing, and these are it's tokenized culture. And some of it might be fleeting, like Slurp might last a day or it may last 10 years. Who knows? I mean, Doge, who the f*** thought Doge would survive? But it's still worth multi-billions of dollars.
Yeah, and the chains that can support this culture are going to be the chains that have value. So Solana, and I'm a bit of an ETH maxi in terms of who has the best decentralized internet computer. But at the end of the day, if the Solana price is going up because people are launching these meme coins on it, and a new developer to this space says, "Oh, this is interesting. I want to develop on Solana because I know I have users." Why does Solana have users? Well, it was a very easy platform, good UI UX to launch these dog money coins, and so it brought attention. So yes, you can poo-poo these things as stupid and valueless, but if it brings attention, if it brings more engineers to the space, then it's positive value for the chain itself.
As Bitcoin hovers just above $67,000, the foremost cryptocurrency by market capitalization has seen a modest increase of approximately 1.36% over the past 24 hours. While it remains within the range of $65,000 to $70,000, experts remain bullish, foreseeing a lucrative bull market for investors. Powell predicts that Bitcoin could reach at least $200,000 by 2025 in a typical cycle, possibly surpassing this figure if ETF demand persists. Arthur's outlook is even more optimistic, driven primarily by macroeconomic conditions rather than crypto fundamentals. He suggests that deteriorating macroeconomic factors could propel Bitcoin to $1 million by 2025, particularly in the event of a significant bond market crash in the near future. Share your thoughts on Powell's and Arthur's perspectives regarding Bitcoin and the broader crypto market for 2024 and beyond in the comments section below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.